Hello and welcome to the day ahead. It is Thursday, the 10th of November. I'm Andrew Gagan. Global equity markets fell overnight as investors awaited the results of the US midterm elections and US inflation data. Wall Street tumbled as Republican gains in midterm elections were more modest than expected. The energy sector lost around 5% as the price of oil tumbled. Also hurting sentiment, Walt Disney fell significantly after the entertainment giant reported more losses from its push into video streaming. Tesla reversed to a 2-year low after Chief Executive Elon Musk revealed that he sold almost $4 billion worth of shares in the EV maker just days after buying Twitter for $44 billion. Shares in Meta jumped on news it's cutting 13% of its workforce, some 11,000 employees. Excuse me. Investors are also worried about the contagion effect from the turmoil in the cryptocurrency market, with the prospect of Binance buying FTX now in doubt. Binance signed a non-binding agreement on Tuesday to buy FTX's non-US unit to help cover a liquidity crunch at the rival exchange, but the deal is now subject to regulatory probe. The uncertainty has seen shares of Robinhood Markets and Coinbase Global hammered, with both now losing 1/5 of their market capitalizations. Bitcoin has lost a further 10% and is now trading below 16,000 US dollars, with many of the altcoins, including Ethereum, having suffered larger falls. While investors remain watchful of the results of the midterm elections in the US, Republicans look set to take control of the House of Representatives. However, the balance of the Senate is yet to be determined, with the Democrats performing better than expected. If President Biden's agenda is blocked in Congress, he's expected to fall back on his power of veto, which is likely to lead to policy paralysis. Meanwhile, the Fed Reserve's fight to lower inflation may lead to a downturn, says Richmond Fed President Thomas Barkin. He said the problem is that interest rate increases are challenged by still high consumer savings, tight labour markets, and ongoing supply problems, saying the Fed is not waiting around for things to settle on their own. If we back off for fear of a downturn, inflation comes back even stronger and requires even more restraint. Across the Atlantic, European central bank policymakers have indicated that they will continue to raise borrowing costs even as the Eurozone economy suffers. Bundesbank President Joachim Nagel saying because in a situation where monetary policy gets behind the curve, the overall economic costs would be significantly higher. US 10-year Treasury yields fell by around 5 points to 4.07%, the 2-year down to 4.59. US dollar advanced against most major currencies as investors look ahead to the US inflation data to be released tonight our time. The Aussie dollar falling from highs of 65.2, currently at 64.3. And the Australian share market is set to reverse course this morning. ASX futures currently off around 2/3%. In the commodities complex, oil prices have sunk more than 3% on data showing that US crude stockpiles rose more than expected on concerns that a rebound in COVID cases in China would also hurt demand. And iron ore futures rose while base metal prices were mixed. Nickel up close to 3%, while copper prices rose to the highest in more than 2 months after Russia ordered a major retreat in Ukraine, prompting speculation the conflict may be nearing an end, but then those gains fizzled in late trade. Gold dipped as an uptick in the US dollar nudged prices off a 1-month high. Spot gold down around 0.4%. And that is your day ahead. We'll see you again tomorrow.